Hey, good day, fellow deal makers. Welcome to the Deal Scout. Today, we're going to talk about raising capital and all about syndication and the do's, the don'ts, and maybe some things that people are doing out there that might get themselves in trouble. So, fellow deal makers, our job is to learn about deals. Our job is to learn about different tactics and strategies and the different legalities within that, so we can put deals together, provide for our family, make some money, and have fun doing it. So on today's show, we brought on raises.com, Mr. Natu. Welcome to the show.
Thank you for having me, Josh. Hey, I'd love to rock and roll and get into this.
Yeah, absolutely. All right, so let's start with this. Who are you?
Yes, so I'm Natu Myers, and I run a company called Raises.com where basically we help real estate investors get prepared with all the paperwork that they need to do as syndication, and as well as some people who are also buying businesses and also creating real estate private equity funds. We just help them go through the process from the beginning all the way up until when they're up and running with their private equity deals.
Awesome. Awesome. Where are you guys located?
So the parent co is actually in Toronto, and so I'm actually from right from Ottawa, born and raised in Canada actually, and 95% of everyone that we even interact with, obviously in a compliant way, are all in the United States. So we're in a different and unique situation here.
Awesome. And
Yeah,
you guys have, I'm looking on the website, and
yeah.
maybe these numbers have even gone over 620 million in deals closed, 800 plus fund researchers. You know, talk to us about the origination. Like, how did you get into this business, and what did that look like for you?
Oh, sure. So I guess I'll give you the redacted version. So basically, it was when I used to be a software person several years back, and then I was doing some coding. But then I learned about blockchain and cryptocurrencies, and then was teaching investors more about that. Saw that a lot of companies wanted to raise capital, but then they didn't know how to properly do it. There was a lot of the SEC cracking down on people, the Securities and Exchange Commission. So then, at the time, there were only two companies in Canada that understood how to raise capital compliantly. They were registered with the Ontario Securities Commission up north, and then they also knew how to. They also knew about cryptocurrency and what it was. They weren't scared of it. So I joined with one of those companies. I learned how they did everything. And then I just decided to split off and set up my own shop, just something that is a bit more modern, based on the times that we're in, especially during the pandemic. So then that's where how we got to where we are right now.
Yeah. Neat. So raises.com, that's a great domain. What does it take to buy a great domain like that? Because I'm sure that wasn't just available on GoDaddy. What did that look like?
It wasn't available, and then it just takes like the main thing. Yeah, it did help that we closed some deals at the investment bank, so we had some liquidity available. That helped, but the main thing is really just even then was just to keep an eye on the market because I was at an auctioning website, and the website is actually called Sedu. So we just looked in the market every day, and then we found somebody, and then the asking price, like we wouldn't really disclose it right now, but the asking price was a certain price, and then the way we did it, we just said, "We'll buy it today if you do this," and then that's how he folded, and so we got it for like 40% off the asking price, and then we just pursued the transaction, got into escrow, and then yeah, that's how we did it.
Yeah, Cedo is a good place to look at domains, and a lot of times, people will go out and they go, "I want to raise capital," or "I want to do this," or "My business is that." So they go to buy a domain, and it's just like not available, or they look at the price tag and they're like $300,000 for a .com or
Yeah.
whatever. So then they try to change it all up. But you guys found one, you negotiated with the buyer, and you were able to say, "I'll buy it for 40% of it," right? Or 40% off.
Exactly. And then if you do it today, so then just adding that urgency, and then because like at the end of the day, if he was saying that, hey, like he was telling us, oh, we have a lot of people since the pandemic, a lot of people are coming to me. But if he really did, then he wouldn't have agreed. So I think sometimes people forget like how like getting the money in your pocket and then just the time can just get people to move. You know what I mean? So
Yeah.
that's how we got that to get done.
Yeah, super cool. And one day, maybe when you disclose that, we would love to hear a little bit more of the details of that. But like even the deal
Yeah.
of acquiring a domain, there's domain brokers out there. There's people who make a living. I know many seven-figure earners who buy and sell domains. So there's a business just in the wwws of the world. But not to so you had this vision, and you're like, I'm going to help people because you went through starting in software, then you got into businesses and blockchain and cryptos, and you saw these things, and people went to go raise money, but they didn't know how to do that. So you saw a pain point. So you dove into that aspect of it. What made you interested in that rather than something else? Like, why was the cap raising side interesting to you?
Yeah, no, it's a good. No one asked me that question in phrased in that way, so that's a really nicely put question. I think it was just the. Well, I mean, it's really the coming to the problem, because really I didn't really care whether I go into finance or tech or anything. I just cared if I had a business. But then I realized, like, I had a mentor that just said, like, at the end of the day, it's like the problem is like the core of it. Like all this stuff, all the flash, nothing, all the talk or people talking on sales calls or all the hype, that doesn't really matter. It's just if you solve a problem. So I just saw by far like the biggest problem was people that needed to raise money. This is by far the biggest problem, in any sector that I saw. So I just said, oh, for me to build a business, I have to solve a problem, and then the best way to solve a problem is to help people raise. Because the investors, they didn't really care about the blockchain, like to the extent that the companies wanted to raise money. So then I just thought, okay, why is it that people don't understand all the things that they need to do to like legally raise money in this way? And so that's pretty much it. And then even if you just remove even a little bit of friction in doing that, like strangely, it's a lot of value for people.
Yeah, absolutely. Yeah, that is one of the most common messages I get on my LinkedIn. You know, you get
Yeah.
a couple people following you, and then people start going, "Hey, will you help us raise money? Will you help us raise money?" And I couldn't figure out, without going the full out investment banking route, like how to actually help people doing that. So we've been just saying, no, here's some friends of ours that could help you in the meantime. So maybe you could give me some guidance as a deal maker. We help put together deals, and we have a brokerage, but like cap raising has been an area that we've been kind of nervous about getting into because all the legalities with SEC, and then you have your state laws, which are sometimes different. So kind of
Yeah.
maybe give me some guidance on how do you guys do it?
Yeah, and we're definitely, we do it in a tricky way as well, because we do understand it's not a joke. So the way that so actually, just to address your first question,
Mhm.
the way that we tell a lot of people to do it is people ask us, okay, we're raising money, and then and how we go about it. So basically, we look at the industry from the top down, right? They're the national laws that say what people can and can't do from the Securities and Exchange Commission. And then there's a table even on the SEC's website, which says all the exemptions, the ways by which people can raise money without them having to go public, to issue public shares. And then the exemptions make it so that people don't have to go public. And then the easiest one that we always see time and time again seems to be, and the cheapest one seems to be usually the 506C Regulation D, which says that you can raise an unlimited amount of capital to an unlimited amount of investors as an issuer. But then, as you said, then there's also the statewide laws, and these some people call these the blue sky laws. So last time I checked, and not legal advice, but it looks like Florida, like you don't even have to notify. So basically, people have to go through the forms to fill in for the national regulator and then the statewide regulator if there's like a notification that you have to do. And then there's you take in those investors, and then based on the rules, you notify those um, bodies, right? That, hey, I took in these investors. Here's a Form D to the SEC, and then here's this paper that I'm notifying this statewide regulator with. And sometimes the easiest way, sometimes is really just to call them, because they have their phone number. It's just to call them and then say, if I was as an issuer, would I be allowed to, like, do I have to notify you, or what forms do I need to fill out to accept investments via the Regulation D506C exemption? And then they're supposed to tell you, and then some of them are scared, some of them they don't know, but then they give you the official paperwork on what you're allowed to do. So that's the first part. Yeah.
Okay. So, you look at the top down SEC, then state laws, and then you find things out. So, as a company that helps real estate syndicators and real estate people raise money. What's kind of, let's start with like some bare minimum stuff. So if someone's like, hey, I actually want to raise some capital for a real estate project, what would be the bare minimum that you guys would say makes sense for you guys to work with?
Oh, in terms of cash amounts, right?
Yeah, and in terms of helping them raise money.
Yeah. So I mean, well, there are two things. The cash amount really, like, we don't really neglect the cash amount because it's usually people that want to make a down payment on, like, a larger deal that involves more than one investor. So a few $100,000. We won't turn away anything that's like even like maybe $600,000 or even a million. We go up to even 100 million because we then send that over to the bigger investment banks that can do that. But structure wise, we usually like telling people to go down a limited partnership structure because it seems to be really prestigious. It gets people like some sort of level of prestige when they're talking to the investors, and it limits the liability, that the limited partners have into the deal, so that they don't have to take that burden.
Okay. All right. So as you're going into this, you guys can help. What does that look like? So I call you up and I'm like, Natu, we're working on a project. We have the target in mind, but we need some help with the down payment and maybe some of the development costs of the project, right? Because there's a difference between I have a target in mind and it's secured versus a blind pool. I want to raise money,
Yeah.
then go find projects. So actually, let's start with that. What are the differences? One is a blind pool, one is I have target in mind. Kind of explain the differences, and then I want to hear how you actually can assist with that.
Yeah, sure. So on a down payment, most people, even before getting into it, most people, unless somebody really needs to get the money available before they're able to transact, for many sponsors that we worked with and then we saw them close, they prematurely wanted to do a blind pool. So they wanted to do a blind pool and say, hey, let me just raise money from anybody and then I can invest in whatever I want. But then they kept on getting objections from investors saying, hey, listen, I just want to get this one deal in your fund. I'm not really interested in all your other deals, or I don't really trust you to do all these things that you're looking to do. So most people, they just start as a real estate investor and then they seem to jump to one deal at a time until they have the track record. And then that usually looks like creating a limited partnership. Like, let's say there's a $10 million apartment somebody wants to buy, and then the down payment for that is $2.5 million. And then because you're able to get a $7.5 million loan, which is 75% loan to value or loan to cost or what have you. And then you need to raise maybe a little bit more money for like to get some new cabinets or something to make it look nice to increase the rent. So then you raise maybe like 300 or 3 million, for example, and then you raise as as units into a limited partnership, and then you be the general partner, and then you say, hey, I'll take like 2% of the management fee of that, 2% of that 3 million every year, 20% of the profits I make for investors I take uh, every year as well. So that's the standard way. But then if it's a blind pool, usually it's like the same thing, except you list the types of transactions you would do, and then when you raise the money, you then deploy it into the type of deals, and then you use something like Juniper Square, which can report to the investors on your type of investments you make. So it's the same thing, just that instead of it being one property, you just list the criteria of the types of deals.
Got it. So then they reach out to you and they go, Natu, I don't know how to do this. We've been doing this for a while, but we've been using our own money. But a beautiful project came along that's a little outside of our scope in terms of our financial, being, but we need to bring you in. And they go, we need your help. And you go, okay, Josh, I'm gonna walk you through this process. What does that look like to work with raises.com?
Yeah, sure. So basically, we called it 2 week ready, raise, repeat. So basically, we have this accounts that we make for people, and they're they're like 50 or so questions that are variables that we put into the documents that somebody needs, the private placement memorandum usually, and then the subscription agreements. So then we get all these questions we extract all these questions, and if the sponsor doesn't know the answer to these questions, we get the financial analyst to work with the assumptions to put them in, and then we put them onto the templates, either PPM, private placement memorandum, or subscription agreements, and then we get the financials, the deck, and all that material together within like 14 days or so. And then through either registered FINRA registered investment banks or co-GPs, that's how we actually help them with the raise. We get them a general partner to work with them, or introduce them to some investment banks, and then help them sell, and then we also give them the investor data where they're allowed to reach out to them directly or hire an appointment setter to do some outbound sales.
Okay. How do you, when it comes to the SEC in each state or where you guys are at in Canada, like every place might have different laws. Like, how do you know where you can operate and by what laws you can do? Because that could be burdensome, and
Yeah,
that requires a lot of research and a lot of legal support. How do you do that?
yeah. Well, one thing that opened my eyes to kind of the flow of how it works is when I was at this boutique investment bank in Toronto, they were really big on JVs and on thinking globally. And that helped me out a lot, to be honest. Because, like, for example, if somebody will be registered in Ontario, they will just have a joint venture agreement with an investment bank in New York, and then they'll say, "Oh yeah, yeah, we're global." But really, it's not them that are global. It's a whole network. So basically, like, we get somebody and we just look from the top down. So we look, okay, in Canada, it's provincial, and then we just follow the rules in each of the provinces. In America, it's national and statewide. We follow the rules there. In the UK, the Financial Conduct Authority is actually much. It's funny. It's actually much more lenient than the SEC in many ways. So we just have the agreements and with the lawyers that check off everything, and then we just say, hey, uh, make sure that the you're not talking to anyone who isn't a sophisticated investor. So there are these different things. If you look from the top down, and then go from there.
Yeah. Yeah, there's different types of fund structures that allow you to talk to the general public. And then there's
Yeah.
some where you're like only allowed to solicit to known, accredited, or sophisticated investors. And there's different types of fund structures. So
Yes.
what are some, there's if you open up your Facebook link or LinkedIn or whatever, you're going to see these people raising capital or talking about their projects or whatever. How do you know, like, when you look at these, some might be doing it the correct and some might be stepping outside of their legal bounds? Like, how do you know what you can and can't do as a air quote real estate syndicator?
Yeah. So then, generally, the so there are a few I guess we'll talk about the different cowboy ways of doing it.
Okay.
So some people, when they raise for syndication, they will get people as a business partner into their deal, but then they would publicly like promote the terms of the like promise that you're going to get a return. The problem with the securities law and not legal advice, ironically, but the problem is that usually it's principles based, meaning that it's not really black and white. But then the danger is that somebody, based on how litigious somebody is, somebody can come and say, "Oh, you did this." If the person who invested with you aren't happy with their returns, they want to cause trouble. So I guess the quick answer is, if you're bringing in somebody into your deal without fully going through the SEC process, then you usually won't be shown to be somebody that is working with the SEC to work in the investor's best interest. That's number one. Number two, often it's pretty dangerous to talk about the terms of the investments. The IRR, the pref return, the return on equity, and all these things to people who aren't accredited, uh, because that's really the real danger is getting people who are not accredited to come into the deal without verifying them. If you go to Grant Cardone's website and somebody like goes on, there's a checkbox: Are you accredited investor? And after you are, then they'll start showing you the terms, but they don't show people the terms before that, because then there's a risk. And this is what I was told when I was with the OSC on another registration. They said, "Don't tell anyone the terms of the deal. That's illegal. Don't do that." So,
Yeah.
yeah,
Yeah. And that's interesting because as people are talking about deals and such like that, our shows about deals, and we've had people come and talk about all sorts of types of deals, real estate raises and such. And there are things that you can and can't do. And, we always say talk to your local, find a local SEC attorney or someone who could support on that. As you guys are going this route, how do you guys make money? How does raises.com and Natu, how do you guys make money?
yeah, it's a tricky way because we're currently so basically it's a subscription service because the money that we make is not in connection to the closing of any transactions. And what's funny, so here's the crazy part. We're actually so at the time of the recording, we're actually working on becoming a broker dealer in
Hmm.
Ontario. And then we're going through the auditing process and they're going to check out all of that stuff. So then that's why we're always worked on a subscription basis where people pay a yearly recurring membership fee. And then, that fee is not in connection to any transaction or any type of capital raising effort. So that's how we get paid.
Yeah. And then in the future, you guys become broker dealer, investment banker or something. And then you could start going, hey, we'll take a fee, a success fee for helping you raise. We help you raise 100 million bucks. You write us a nice check for fill in the blank, right? But right now, you just say, these are the bundled services. You get deliverables, pitch deck, some coaching, some support, some compliance stuff. But there's some things that you guys can't even get paid, doing. So you help, you set up a $10 million fund and they raise 100 million bucks or $1 billion. You're like, well, good for you guys, right? Like you can't get that extra success on there. Um,
Yeah, it's crazy when you put it that way, but that's the game. And then and then something that helps too is just thinking long term because it's just realized there's a huge abundance of deals, right?
mhm.
Uh, there are so many of them, and then people, and I know stories of people that even circumvent people, and then so I mean, it takes time to for somebody to if somebody wants to prematurely be too ambitious at in the wrong way, then maybe in the long run they can come back, and then yes, you can be investigating somebody for years before anything comes out of it.
Sure, absolutely. And as you guys are going through the process in raiseit.com, do you guys specifically focus on real estate syndication deals, or do you guys do mergers and acquisitions? Like, well, tell us about some of the different types of deals that you do or don't do.
Yeah, yeah. So I mean, there are three buckets right now, and then it used to be more broad, and then we found the best buckets. So basically, yeah, real estate syndication is number one, and then for those who are more like upmarket, that they've done several syndications and they want to create a real estate investment trust or a big blind pool fund, then we help people do that in the real estate niche. And the third group are those who want to buy their first business because there's this like recurring thing of people that need to have an equity down payment sometimes to buy the business. But then it's like, okay, then wait, what is equity? And then how do I raise equity? So then we run into that a lot. So then that's why sometimes we help
Yeah.
those out as well.
All right, guys, we're back. I had a technical difficulty on my side and I heard a buzz in my ear. So if you heard that, I apologize about that. We'll blame it on Zoom. So as we're diving back into the interview with Natu, we're talking about the three different buckets, right? So you got, the real estate syndication, we've got the blind pool, and then we've got the M&A where people are going to go buy their first business. And if you had to categorize these different buckets, which one do you get most excited about? Which one seems to be the thing that juices you up the most?
I think it's definitely the people that have already syndicated real estate that are looking to create the real estate private equity fund, blind pool or a real estate investment trust. Because I learned the most. They're the hardest type of deals. They're the biggest type of deals. They're the smartest and most experienced when it comes to closing and raising money for deals. So I learned from them, really. I'm teaching them some things. They teach me a lot of things.
Yeah. What to date, like give an idea. You guys started during the pandemic, is that right? Somewhere around 2020 is when you guys launched?
Yes.
Okay.
Yes.
So you as of recording this is December of 2022, over $600 million in deals. That's pretty awesome. Give us an idea of the first deal that you got on the docket, right? So you put your flag in the sand, saying, "Hey, I'm gonna help you guys raise some money." Talk to us about deal number one. How did you acquire deal number one?
Yeah, so a lot of many of the deals, and I think I'll start with Addy because he's real estate because the first one was a software one because that was when we were abroad.
Hmm.
But then the first one was it's because like I already had a name for working on deals at another shop, and so because I switched over, people were still coming to me anyway. And so Addy, his story is interesting. He was based in Vancouver. He was preparing to raise capital to do his first multifamily acquisition in Edmonton, Canada. And then he wanted to just make sure that he had everything organized and set up properly for him to start selling. So that one was it was around 4 or 5 million for an what's it called apartment acquisition, 44 units.
Okay. So because of your name and some of the successes you had, people were reaching out to you, "Hey, I want to raise capital. I want to raise capital." So you went along with it. And since then, you've done a bunch of deals. When you look back and look forward, what what was some of the things that you learned along the way? Because you were working for another house, you started your own. There's a big difference of working under someone else's, roof to building your own business, doing it. as an entrepreneur, like what were some of the things that you learned that maybe you didn't expect, and you're like, now that I know that will, helps me be a better deal maker and a better entrepreneur moving forward.
Yeah, like if I go through it, it'll probably be here all morning to night. But then I guess the key things, um, it's fun. People seem to know less than sometimes you think, in terms of like some of these, because the people I was working with, they're old, they had public companies. I went to one of their houses. Is one of the nicest houses I've ever seen in my life. It was, they're really well off people. So like I think the learning I got from them and realizing that there's like a mass market, because some people they focus on getting like three people, or three clients for like the year that are extremely, extremely well, like amazing clients. Whereas the way that the world is just, I had to turn in that into a way where we could do things more mass markets, um, and then kind of democratize it, kind of like, make it so that we're more things to more people instead of just being a few things to a few people, because the vision, we're trying to like, you help more people get into this type of stuff. And so
Yeah.
that involves kind of like, you know, lower margins. So basically lower margins, or sorry, higher margins, like lower expenses. Being in Canada helps. So then our staff is like either Canada remotes, few in the US, not many. So it helps just to lower some of the barriers to entry, make it more broad, make it more simple. Those are the main things that I learned how to transition to. And then I guess the last thing is probably just being confident, because sometimes the confidence is more important than even the skills sometimes. Because I remember like one of my old mentors, he said that he's been in $300 million lawsuits and he hasn't lost one of them. And another time, like I said, hey, the SEC, some guy said he's going to report somebody to the SEC. Like, what are you going to do? He said, well, we didn't do anything wrong. Let them report, and then we'll tell them we don't do anything wrong. And I was like, wow, like look at that confidence. So that confidence is pretty critical with this type of stuff.
Yeah. Yeah, it's so good, man. I think especially in the environment that we're in, we've experienced a lot of growth in real estate and such, and we're walking into a unique period in 2023, where maybe the economy is going to change, or maybe, the investors are going to be hungrier for good deals, right? So I think we're going to have more deals, more access to capital because people are going to want good deals, but they're going to need trusted sources to kind of bridge that gap. So with that, on the investor side, so we've talked a lot about the cap raiser. On the investor
Yeah.
sides, what should investors look for when they're looking at all these different opportunities to invest in? Let's just start with accredited investors, right? So accredited investors, and they have a little bit of pool of capital, and they're walking into 2023 potential recessions or whatever the case may be, and they're going, what should I invest in? Because I lost faith maybe in the stock market. I don't want to lose money just sitting in a bank account. So now they're starting to look at funds or private equity groups or venture capital. So they're starting to look. This, I don't want you to give financial advice because that's not the purpose of this, or even legal advice. But like when talking to a real estate syndicator, like what questions should they be asking? What kind of things should they have their eyes open towards?
Yeah, and then this is regarding the on the investor side. I remember on like just yesterday, we had somebody, his name is Abdiel. He himself is investing in several deals after doing syndication, and he raised like a $75 million fund. And then he came from the Richard Wilson conference. I think one of these family office conferences. And
Yeah.
then, yeah, and then that's the freshest example in my mind, because depending on how sophisticated they are, I think people have to treat people different based on how sophisticated they are, and based on how like, mandate sensitive people are. Because he was saying that when he went to this conference, the family office, like he learned that he didn't need, he shouldn't, he wasn't, he was people were sometimes too direct to
Mhm.
the people that call themselves family offices. There's some real money in there, and then he was able to get his anchor investor from there after being in that. It's a really good conference for like I think 6 years, and he got several other investors in there for his one of his funds. But then the way he did it, he was just like more of a slow burn. Like he got them to opt in to receive information from him, and then when the time was right, then he struck. So then I think for the family office, and then another thing with the family offices, they're less like private equity investors or private equity firms that say that they're investors, because they don't write their mandate on their website. They're more just like vague, relational driven and introduction driven. That's for that. Canada and other conservative places, like the Addy deal, like was very like intro based because unlike the small check investors in the States, sometimes, it's just through the introductions is how that one got done. And I guess the third thing, what should investors look for? Um, that's what they do, and then what they should look for. I mean, it's just comes down to the IRR, the cash and cash return, return on equity, the preference, the hurdle rates, which is always the same, and then the sponsor experience. And so if they're not as sophisticated, you're able to sell them more. If they're more sophisticated, it's more just direct to the point. So you can't bullshit, for lack of better words. Excuse my
Yeah.
language. I don't know if this
You're
is
okay.
okay.
I'm
Yeah.
a big boy. I don't mind you saying whatever you need to say. And
Yeah.
in the world of family offices, and I've interviewed Richard a few times, had coffee with him. I went to go visit him in his office before, and he wrote some really good books about raising capital and all that. So like he's been phenomenal at helping family offices do that. But we're getting to a point where trust is either earned through taking people through a series of, hey, opt in, I'll give you some information, you want more, ask for more, and you could take them on a journey. And then there's introductions, like, people will reach out to me and they go, hey, could you introduce me to fill in the blank, said family office or whatever the case may be, so that trust is transferred from me because I have a relationship with them into that. So in your experience when raising capital, what are some strategies that you have found that work really well, and what are some strategies that you're like, those will fail every time?
The introductions, like they seem to always be the target introductions seem to be the best. Targeted introductions when it comes to, and something that's underrated that also works well is the co-GPs or the investment bankers that people have to be careful because the rights investment banks or bankers, because some of the investment banks they charge a lot of money, and knowing full well that they're not able to execute the deal because of the fees, and there's a lack of transparency, which is why we exist, is to try to change that. But then there's some investment banks that are just awesome, so just to find the best ones in that, and then that are success driven. The third thing would be and I guess actually that may cover it. And the third thing maybe, yeah, the warm. So then the problem with the warm introductions and is that it's limited. So people, like, we know, so there's somebody that we're working with that they run Facebook ads, $5,000 every month, and they get I think a few $100,000 into their limited partnership deals, real estate. He's doing this from Palm Springs, so he's getting people just like as if he's selling a product. And so some people need to really open up to the fact that you can reach a massive audience of investors, and you should do this at the same time while you do the warm introductions, because the warm introductions are too limited. So those are the three ways. And I think, just I guess the icing on the cake is communities too, because communities and building communities is something that we're a fan of, because you can do introductions more at scale in a way, because then you're able to introduce the other people who can introduce the other people who can introduce, and then it's basically introductions on steroids. And so joining like communities, different groups, different conferences, long term is basically introductions on steroids.
Interesting. Yeah, I'm a huge fan of relationship driven deals, right? So it's like I've built a relationship with you, Natu, and over the years, and then you've seen me work, you've seen, our, integrity or whatever, fill in the blank. And then when I come to you and we're talking about a deal, it's just you already have that experience with, so I love that. The warm introductions are beautiful because you're transferring the trust. And by me making an introduction to you or someone else raising capital, I'm putting, I'm putting my name out there by making
Yeah.
that warm introduction. I've Let's talk about introductions because I have made a mistake in the past.
Mm-hmm.
Someone was looking to raise capital, and I introduced them to a high net worth individual, and the high net worth individual called me and he said, "Josh, did you do any background on this person before?" I said, "No, I just met him at an event. They were talking about that. I know you kind of invest." And he goes, "Yeah, I just Googled their name real quick and I saw name versus SEC 16 times." And I'm like, "Oh man, I'm sorry." So introductions for the one, I had a good desire to connect A and B, but it put me in a weird spot because I can't do background searches on every 20,000 people and emails that I get. Like I don't have the time and the bandwidth for that. So how do I, and I don't make any money on making introductions for capital. We're not investment bankers. But what are some ways that you can, what advice do you have for a person giving intros or receiving intros, especially if, that's not their main gig, they're just doing it as goodwill? What advice do you have for people like me?
Yeah, that's a good point. No, definitely, definitely got into some scary situations. So there are a few of them. One would be to, a lot of introductions wherever, if you're on the extreme, you know, wherever you can do things where there's, little, not legal advice, but little writing, things are more vocal, and, there's no paper trail or breadcrumbs that could lead to you. That's one way. The second way would be to, I mean, that's really one. The second way would be to work with outfits that are that have that are investment banks or have lawyers and things like that. Like, for example, we send a lot of investment banks a lot of deals, and then they're the ones who usually take some of that ownership anyway, because they have the insurance, because same thing, we're getting insurance, but then they have the insurance, the licensing, and all that to be able to take some of that, to transfer the risk. So I guess number one would be to remove the risk uh, by removing any breadcrumbs. The second thing would be to transfer the risk over to a third party that can handle that risk. Either like if a buddy that has been registered or something, then they can do that. And I guess the last thing would be to reduce the risk by doing some more upfronts. Like there's Unicords, which we got some coders to use Unicords, and then they have like something called an API, application programming interface. You send it to Unicord, it returns back all the people that were in lawsuits, and it's really useful. Saved us some headaches. So that's a good tool.
Yeah, totally. It's really good to, in this business to make sure that you're doing great deals with great people, but you have to follow the different, laws that are going. And if you don't know the laws, it's not, you just can't claim ignorance like, hey, I didn't know it wasn't a law. You have to try to find the laws that match the kind of deals you're doing. So as you guys are building out, you're looking at becoming an investment bank and working through this process. Like, where does the future look like for you? Where do you want to see this go?
Yeah, so I want to see some of the best investment banking services that people get. I want to see it be like something where it's almost like something that somebody can get at Starbucks. It's like the Starbucks of investment banking, right? Where instead of it being where it's like, I get your name and then I email a bunch of buddies that you don't know, and then I tell you yes or not, I can do the deal, and then I ask you to wire me $100,000. I think it would be better if it's like, if it's done in a way so that people can see like, okay, yeah, I'm raising for the deal. Here's what I'm getting. Okay, I see what I'm getting, and I get something, and then I can actually see the investors that I'm talking to, and I know who I'm talking to. Because the problem is like, so that's really the vision. Because the problem is like, if you want to get the success fees when you go public, you have to hide information. So you're incentivized to get the deal done, but you're also incentivized to hide information. But I mean, if we're able to be incentivized to get the deal done and to reveal information, that's where we want to be. So,
Got it. I don't understand the hide information. Explain what that means, to me.
yeah. So let's say like I know a buddy that's going to fund your deal, and then I get like 5%. I'm not going to tell you who that person is because I'm not really sure if I trust that you won't circumvent me and then you close the deal behind my back, and then I won't get my success fees. So a lot of these firms, they just say, hey, this is our private book of business. We're not going to show you what we're doing. But then you have some bad actors that they pretend that they have a book of business that's interested, and then they don't, because it's like, who are you? We're registered with the Securities and Exchange Commission. We have lawyers. You can't do anything. You can't sue us. So.
Yeah. Yeah, I've seen that before. It's just like, hey, look at, I have a lot of friends. You want to get to my friends, you have to pay the money. And so people pay based on the trust. And then maybe they don't get the introductions, they don't get the raise or whatever, fill in the blank. So how are you guys going to combat that? How are you guys going to work through that? And how do you make sure you get paid when said deal is done?
What we're going to do, we're going to focus on the people in the creation stage. There are a lot of people and platforms and tools. They create the deals and the entities, right? that's something that we want to get involved in, because if we're part of the creation process of the general partner and the deals and so on, then we would be able to, and then we work with people who don't know how to do those things, then people would like rely on us to help them create those documents so that the deals go through those new entities that we help them make. And then in going through those entities, would be like Raises.com Securities Inc. on the name of the entities as a broker on the private placement memorandum. It will be much easier to work with people through that closing process if we give them all the information for them to close the deal in that way.
Yeah. All right. So you guys are build, you're stepping into investment banking. Do you guys have or are you guys in the plan having your own pool of capital? So you're doing this for other people. Are you guys investing your own money along the way, or are you guys creating your own pool of capital for future deals? What does that look like? Or is it not something on your radar?
The closest thing to that is on a debt. So it is on a radar, but not overnight or anything. But the closest way is just on the debts, because we want to start at the easy stuff. So we want to look at having just different offers, right? And then one of the services, right? And one of them would be for those who don't know how to source the debts, because we find that much easier to source, to help them source the debt for their, either their one-off syndication or for their fund, and then more of a done for you debt sourcing, and then done with you equity raising. So that's something that we're working on right now behind the scenes.
Cool. Natu, where can people go to find out more about what you guys are working on and connect with you?
Sure. So this one is raises.com, and that's where people can go, and um you know but yeah, just feel free to, my name is Natu Myers, so just feel free to just check on other things that I'm working on as well. Okay.
What questions should I've asked you during this interview, other than the Zoom, buzzing in my ear and we had to pause and dive back in? Like, what question or input do you have that I should have asked you or pulled out of you?
I think probably the reasons why people even want to get into syndications in the first place. So I guess we can talk about that real quick before we
Yeah,
go.
please. Yeah, go for it.
Yeah, so I think when people get into syndications, like it's important. Some people, they're happy on the one-offs, for the rest of their career, and then some people, they're really hungry to, jump into the syndication and the fund managing. So I think it's important, like based on what you're looking at long term, it's harder to do it in the short term, but in the long term, like usually if people want to raise more capital to acquire more deals, then it's really better in the long run for getting it done. So
Okay. Awesome. One more time, where can people go to connect with you and do a deal?
they go to raises.com, raises.com.
Awesome. Well, Natu, thanks for coming on the show, sharing your experience and your journey along with our fellow deal makers. Fellow deal makers, if Natu is sharing some information that you'd like to learn more about, his contact information will be in the show notes below. Connect with him and find a way to learn and do more deals together. I hope you guys are having a wonderful day. If you have a deal that you would like to talk about on the show, head over to thedealscout.com, fill out a quick form, and maybe get you on the show next. Till then, we'll talk to you all on the next episode. Bye, everybody.